Hello and welcome to my professional judgment video where we will be analysing Coles Group Limited. Inspection of the current market position identifies Coles as a dominant competitor, operating in the supermarket segment as well as liquor and express markets. Coles has a current market share as estimated by Passport at 34%, which is second highest in industry. Looking at the share price movement of Coles, we can see that over the last 5 years, they have experienced positive growth, arriving at a current stock price of $17.93. This parallels the steady rise in revenue over the last 10 years from 25 to 34 billion. Other financial analysis shows an earnings per share of 83 cents and a PE ratio of 21. The key strengths of Coles stem from their ability to produce revenue despite tough macro and microeconomic conditions. This is because of the nature of their business being a necessity for most consumers. Other strengths include their strong, diverse brand portfolio and their current marketing sponsorships, which have helped add value to the brand. Coles has also successfully stayed an industry innovator through their use of technology such as drone delivery. The primary weakness that is alarming for investors is the supply chain issues facing Coles and the industry, where recent events such as floods and the pandemic unveiled holes in the Coles supply line. Other weaknesses of Coles include their public relations, where adverse media attention surrounding Coles and Australian dairy farmers is continuing to hurt relations with both suppliers and the general public. Key opportunities for Coles moving out of the pandemic arise from the opportunity to redirect themselves and step forward under new CEO Leah, who is set to replace Stephen Kane. Other opportunities include expected population growth and the rise of online shopping, which Coles is well equipped to take full advantage of. The key threats facing Coles and its shareholders are a result of the unfavourable economic conditions such as high inflation and interest rates. This, alongside an already pessimistic consumer sentiment index, are likely to result in consumers tightening their budgets. This follows through to the threat of Aldi, whose low price point has already eaten into the market share of Coles, and as consumers look for a cheaper option, this is likely to continue. Based off the analysis of Coles' market position and a SWOT analysis of Coles Group, I recommend that current investors hold their shares and potential investors hold off buying into the company. This is justified as whilst there are a number of threats facing Coles in the current market conditions, Coles has shown they are able to withstand these events, and as such, current investors can have trust in long-term share price of a company. These are my references. Thank you for listening.